Hi, it's Greg Watson from the Investor Hub here again, coming to you on our regular vlog. Today I want to talk to you about different types of loans. Now the way I look at it, there's a massive amount of different types of loans and different sorts of loans in the market from various lenders. There's so many different lenders in the market that it can be really quite confusing. First of all, you should get a mortgage broker like us to help you work your way through that maze, because it can be really complicated. And who's got time to go through all of that information? But really, when it boils down to it, there's only three types of loans. There's a variable loan, a fixed loan, and a line of credit. The differences between other types of loans are usually only about packaging or pricing and features. So a variable loan also has, as the name suggests, a variable interest rate. So that interest rate goes up and down, usually based on changes to the Reserve Bank's cash rate here in Australia. Now, comparing that to a fixed rate loan, the fixed rate loan obviously is fixed for a period of time, and that is based on market conditions at the time that the loan is entered into or the loan is set. The great thing about fixed rate loans is they can secure your cost of funds for a period of time, and if you're locking into an investment where you know pretty much what your return's going to be, i.e. rent, then you're pretty much locking in a rate of return for a period of time. A variable rate loan will be different to the way that reacts to an investor, because your rate of return will go up and down as well. But it provides some certainty around rate of return, which is really quite handy for an investor to know. A line of credit is a different type of animal altogether, and it's useful for people who have differing cash flow needs with their finances. So they might need $20,000 for a short-term play in shares, and then they sell that out and then they repay that loan. Or they might be having a number of different investments or different needs. They might be going on a holiday and they might need a new car. So there's a whole number of different things that you can use that for. But it's almost like a big credit card. There's specialised times when you'd use a line of credit as opposed to using a fixed or a variable loan. So really, that's all I wanted to talk to you about today, was just the three types of loans, just to think about them: variable, fixed, line of credit. All the rest is bells and whistles, smoke and mirrors, pricing and packaging. So if you want to have a conversation about any of that, if you're unsure about the type of product you've got or what's best for you, please give us a call at the Investor Hub, 1300 651 363, or email info@theinvestorhub.com.au, and we look forward to helping you out really soon. I'm Greg Watson. Bye for now.